Good morning, everybody. This is one of our first early morning weekend streams, which is pretty cool. So today we're going to talk about consistency, which really comes down to your process. So if you have any questions before we start about the strat, what we do, a lot of that will be answered as we go through this. This is going to be dedicated more to people who are newer to the strat. So we're going to start really simple and then we'll work our way up today. If you have any questions, though, make sure to put them in the chat or write them down. And then when we say, hey, do you have questions, put them in the chat. Or, if they're already in there, maybe Sarah has answered it or I will answer it on the stream. Just give me like a few minutes here, like 2 minutes, and then we'll get started with that. I apologize. Just a lot of random stuff today that's slowing us down. So 1 second. All right, guys, sorry about that. Let us get started now. So the first thing is, if you're new to the strat, what do you need to know? There's 3 universal truths, and they're relatively simple, but they can get complex if you let them. So what are those? You're going to see a lot of content here. So the first is, there's only 3 types of things that can happen, or 3 ways price can move. It can either go inside bar. So you can see this has a lower high, higher low to the previous bar's range. This bar is stuck in the middle. This is a consolidation. It means it's like going sideways like this, because this bar, it might last a day, it might last a year. So it's going to go sideways for the time frame you're looking at. And then we have trending or directional. This would be a 2 up or 2 down. So we can see here, this green bar, the second it takes out this high by 1 penny, so it could look like this, this becomes a 2 or a trend to the upside. So you think a 2 is a trend. The same thing is true on the downside. When this bar goes red, even just by a penny, that's a 2 to the downside. And it's red, it's going down. And then we have what we call scenario 3. So scenario 3, you'll see it's gray here. It could be green or red. It could even be a doji. But what a scenario 3 is a bar that takes out the lows first and then goes the opposite direction, taking out the highs as well. Or a bar that takes out the highs first, new highs to the previous bar's range, and then takes out the lows. So what we say is, in order for a 3 to occur, it has to be a 2 first. Because if we go back to the 2 up, right? You see this is a 2 up. Let's say it looks something like this. In order for this 3 to happen, if it started as a 2 up, this would be the 2 up. It could be green or red at this point. Doesn't matter. But once it comes back into the range, it starts going the other way, it can take out the lows of this. So if we had the colors, it would look like this. Let's say it was a gap up. So if it starts gapping up and comes back below this high, we can target to take the other side of that range. And if you have any questions or you're confused, let me know. All right, perfect. Just drop them in the chat. Now, since we can only have a 1, a 2, or a 3, we know in order for a 3 to happen, you must have a 2 first. So 3s don't just magically appear. You see them coming, which means you know where price is going, because price is trading in 2s, 3s, and 1s constantly. That's all it can do. We also have a second universal truth. This was the first, the 3 scenarios. The second is that from one bar, or not from one bar, but across 4 time frames, price must trade in the direction of the most 2s, which are trends, and 2s going 3, which we can say is a failed trend, a rejection, or just a 2 going 3. All of those mean the same thing. So for example, it's called time frame continuity. If we go to the month, you'll see the month is a 2 down, but it's green. So it's making new lows, but it's green. So what's it trying to do? Well, it's trying to become a 3. So we know, just based on what the month looks like right now, it's attempting to go 3 this month. So we have the rest of this month. It could be the second day of the month, and this is what it looks like. It could be the second to last day of the month, and you only have 2 days left. So we want to know, do we have a lot of time left on this month or not? But let's just say in this case, we still have a couple weeks left until the month closes. So it's trying to go with scenario 3. So that is a 2 down going 3 to the upside. If we go to the week you'll see is a 2 up. So what we'd say is the month is attempting to go 3 to the upside. And this week, it's going up this week. And then if we go to the day, you'll see the day is also a 2 to the upside. So the month is a 2 going 3 to the upside. The week is a 2 up. The day is a 2 up. And then this 60 minute is also a 2 up. So what's happening? It's going up right now on the 60 minute. It's going up today. It's going up this week. And it's attempting to go 3 to the upside this month. So the month is rejecting the downside. The rest of these are trending to the upside. So what does that tell us? This tells us that all known participation groups, which is a fancy word for all the traders, investors, anyone that's clicking buttons, they're all doing the same thing to the upside. They're all trying to buy, or they all are buying. And this is true anytime you have the 60-day, week, and month, the same color in the same direction. So in this case, it's going up. It has to be. The only thing you could say about this pattern or these charts here is that it might reverse. But at this point, it has not. And then we have the third universal truth, the broadening formation. So the broadening formation is told to us by the outside bar, or the scenario 3. So when we see a scenario 3, we can actually draw a broadening formation from that. We're going to take the low of the 3 and we're going to draw left. We're going to go up and left. We're going to take the high of the 3. Oops. And we're going to go and draw left from that. And we're going to go down and left. So you're going to see it's going to broaden. It started here and then it went lower. Started here, it went higher. And what this tells us is, since we know the 3 happens and you have to have a 2 first, if price fails one side of a range or the range it's trading in, it will attempt to take the other side. So this is how we gauge the magnitude. And the 3 and the broadening formation are synonymous, which means they're the same. Because this 3 is a broadening formation. The same way, the lower time frame here makes higher highs and lower lows. All of these bars are a broadening formation. The same way, this 3 is a broadening formation. Because what you'll notice is, if this is like, let's say, a 60-minute chart of like a futures, all of these bars on a higher time frame are just an outside bar to all the bars on the left. And we're going to have more ways to show this, but it's really important to know, because what we're trying to do then is we're going to use the 1s, 2s, and 3s to know when price is reversing. We're going to use time frame continuity, or multiple time frames, the month, the week, the day, and the 60-minute, to see how much evidence we have. Because if they're all green or all red, we know it's going up or down. And then we're going to use the broadening formation to know where price is trying to go. So if we see a period of what we call full time frame continuity, all the time frames in the same direction, and we're going back through a broadening formation, we can say it's attempting to go to whatever price that we're looking at for the other side of the range. So let me show you what that will look like. Hopefully this answers your question. I see that in the chat. So this is why continuity is important. So what we're going to see is price trades in broadening formations. And you don't have to be, a wizard in drawing these. But what I want you to notice is, if we're going to have a big weekly chart that's going down, right? What's going to happen during that trading week? What we'll see price do is it's going to create broadening formations, or 3s. And then those will expand. So we'll get outside of those 3s, meaning, if the high and low of the 3 was this, and I apologize if you're on Discord, you can't see my hands, but if this was the high and low of the 3, we want price to get out of the bottom or the top of it and expand. That's what causes really big expansion, big movement. So throughout a big downtrend like this on one bar or higher time frame, we're gonna have a ton of smaller broadening formations. And we'll talk about how we draw those in a second. It's very simple. But what I then want to show you is, this is what we want to do. So we want the month, the week, and day. We want to align those in our favor in one direction. And then we want to use lower time frames and lower time frame broadening formations to enter into that. So you can see, right? We have a reversal. So it's going 2 up, this bar here. It was into new highs, which would be new higher highs, top of a broadening formation. When it goes 2 up, 2 down reversal, is this was going 2 up, this is now going 2 down. What's happening? It's failing the highs. It made new highs and it reversed. So where's it trying to go? The other side of the broadening formation, or the new lows, because that's what price does. So when we have everyone selling and we reverse at the top of a broadening formation, that's going to the other side of the range. That's what it's trying to do. And this does not mean we aren't going to change the color of higher time frames. But what it tells us is that we can also use broadening formations to change the color of bigger time frame or higher time frame charts. So for example, month is red, the week is red, and maybe it looks something more like this, but doesn't matter. Month is red, week is red. The day was green, right? So we can say the day was green, but then we had a 15 or could be a 60-minute signal, which is what we prefer. So I'll just, same thing, right? It doesn't change anything. But let's say we have a 60 signal. When this signal breaks, if we know this is trying to do what? Take the other side of the range, So it made highs, lows, new lows. What we can say is if that signal works, it's going to change the day. Because if we look here, the daily open, where is it? It's right here. So if we're going to go from this side of the range all the way to the other side, the day has to change. Pretty simple. So we can use signals to confirm having all the time frames read, which we call full time frame continuity down. We can also have the signals to change time frame continuity into, in this case, full time frame continuity down. So the signals do not have to occur with every time frame in alignment, although we prefer that. But the signals can create all the time frames in alignment because we can change the color of those higher time frames. So when we do multiple time frame analysis, what we're doing is we're looking at broadening formations. We're timing actionable signals or reversals, which we'll talk more about. And we're doing it back through broadening formations with time frame continuity. So for example, monthly signal, right? You'll see we have a 2 up in red. Why does this matter to us? The reason it matters is because in order for a 3 to happen, it has to go into new highs and then fail, right? So if this was going to go 3 in one bar, it would look like that. So if it closes and price looks like this, what's it trying to do? It's trying to do that. It's just trying to do it in 2 bars instead of 1. Because you'll see, right? If this continues down, is these 2 bars not the same as 1 bar? The only difference is it takes more time. So you can see this is a 3. The same way these 2 bars are also a 3, right? And it could happen in 10 bars, 100 bars, 1,000 bars. Doesn't matter. It's always going to trade in 3s. So in this case, we know on the month we're failing the highs. We'd prefer to see it go down. So what do we want to do? We want to line up lower time frame broadening formations in that direction. So for example, a 4-hour. So if we have a 4-hour, it could be a daily, right? It doesn't matter. But if we have a 4-hour and we get into the top of that broadening formation, we can say, right, if this works, where's it going to try and go? It's going to try and go to the other side of that range. What would that do? That would cause the monthly reversal where it's going up 2 to the upside and then reversal 2 down. And we know it's attempting to give us that broadening formation, right? Which would look, it would break and then it'd look to go to the other side of this range. So we use these lower time frames to get in there and cause that to happen. So you can see, right? If this 4-hour breaks, boom, now we have the monthly reversal. We have the monthly broadening formation kicking in. We have all month as long as that's red and still going down. So you can see if we kind of overlay these two, the high of the month is caused by a 4-hour or daily broadening formation. And again, these time frames, they don't matter. What matters is, are you using smaller time frames to get into bigger time frames? And then what we'll note is more often than not, when you have higher time frames in your favor with full time frame continuity, in this case down, it's going to tend to expand that range, right? And this is where it's like you make a little bit of money, lose a little, make a little, lose all of your money and then some. That's what's happening. So you can see throughout the month, what is it going to look like? We're going to have the broadening formation, right? They puke, and then they're going to restart. We're going to get a new broadening formation, which I don't have drawn out here. And this is where I can show you how we draw them, right? So what we're going to see is this broadening formation here, it's always going to start with what we call compound 3. And compound 3 is just like we were talking about before. See how these 2 bars went outside of 1, 2, 3, 4 bars? This is a 3. That's a broadening formation. So where do we draw it? Oops. We're going to draw it from right to left. So from the top of this 3 all the way back. And we're going to draw it from right to left, the bottom of this 3 all the way back. So that's our broadening formation. And then what price will do is it will test both sides of that. It's going to be our support and resistance. So you can see we go 3, right? And we do this in 2 bars. Hopefully this is making sense. Let me know in the chat if it is. Makes a new low. inside bar. This is a reversal. Then you'll see 2 up, 2 down reversal, boom. And then what does that do? It gets this monthly chart going to where it's supposed to go. It's trying to make these new lows. So we're looking for those slight higher highs and then in the direction of those big time frames. So now this is where, we've discussed a lot of topics. I know it's a lot of information, especially if you're new. So if you have questions, please drop them in the chat and I'm going to start reading them and we'll go through. How to play a 3. So we just showed you how to do that. A 2-2 reversal, that's how you can play a 3. Because if we look at ES on the 1 hour here, what did it do? Well, you're going to see we made lower lows, higher highs. So this becomes the broadening formation. These 4 bars win a 3 to this. And then we'll see it went 2 up, 2 down reversal off the top of it, goes to the other side of the range. So on like I don't know if it's going to show us. See? So on a 2-hour chart, what happened? 2 up. Did it go red here? It did. What does that tell you? It's going there. Did it do that too? It did. So you know what's going to happen. Now it's subject to change, right? If it went green and then flipped red, but then flipped back green, now it's changing again. So we need to have those 2s going 3 or those broadening formations in our favor. But it's all repeating. If you're like a 15-minute chart. Your question then, like, how do we time it? So if we're playing for that 2-hour outside bar, we can use signals, which would be inside bars, 2-2 reversals, hammers and shooters, which we won't have to discuss here. But you can see we go outside bar, that's a broadening formation. Inside bar, this would be a signal. And then reversal to the downside. So if we can time, and really simple, just using 2-2 reversals, we can take those at the tops and bottoms of broadening formations. So if we go to like APLD, for example, you'll see 2 down, 2 up reversal. Where is it occurring? Well, if we look left, right to left, it's after new lows. So that has to be a broadening formation. And you'll see we target then the other side of that range. And why do we even know to do that? Well, this year, what's happening this year? It's going up this year. So this year it's going up. The quarter, is it a 2 up this quarter? It is. It's making new highs to last quarter. This month, it started as a 1, but it went green here. So if we look at our continuity, what happened right here on Tuesday? The day, the week, the month, everything went green here. So that's full time frame continuity. It has to be going the other side of that range. So you can see how full time frame continuity up is always going to be trying to take this out. Two up conditions. Do we higher high previous high and also low? You're going to need to reframe that question. I'm not sure what that meant. But this is just kind of laying the foundation. So if you are in the Discord, you can use the Discord chat. How to play expansion. Trade lower time frame reversals into higher time frame continuations. Or lower time frame signals into higher time frame continuations. Okay. Well, if we're not having much questions, then we can move forward here. So now that we have a rough idea, and just to summarize here, let's say this is our monthly chart, right? If this is our monthly chart, if we go 2-2 reversal or 2 down in green, we know it's attempting to go and take the other side of this range. During these 2 months, we know we're looking for what? We're looking for broadening formations on lower time frames to time back in the direction of the green month above here, the green month above here. So then the question is, how do we find the signals and the broadening formations? And how do we make this systematic? So really important concept. We're trying to condense this down. But a really important concept is when things occur matters. Meaning, if you have a reversal on Monday that's going to be different than a reversal on Friday or Thursday, Wednesday, because of time frame continuity. So think of it this way. If this is going to be, let's say our weekly chart's going to look like this. So this week is going to look like this. How is this most likely going to happen? The most likely way is if we look at a daily chart. Let's just say the previous week, we have Monday, Tuesday, Wednesday, Thursday, Friday. So this is the previous week. If this is going to be a 3, what normally happens is we'll see on Monday, it does go higher, but then it starts coming back. And then on Tuesday, we have a reversal. Wednesday, Thursday, Friday, either continue in that direction or we might have a consolidation. But it's going to look something like this. So you can see if this is Monday, we went 2 up Monday and then reversal below this low on Tuesday. So when that occurred on Tuesday, we had the daily reversal. The week had to become red at that point. So in order to get an outside week, we prefer to enter on a Tuesday because we get the reversal Tuesday and that causes the week to try and go 3. So when we go back to APLD, Monday, 2 down in green, how do we find that? We scan for that on Monday night. Tuesday reverses, now what? It's trying to go outside week. So on the weekly, our first target, our first idea of where this is going is last week's highs, which is 1573. So you can see anytime it's green here, it's trying to go there. And since, like we showed before, the month is green, the week is green, day is green. As long as that's true during this trading week, it can go further. It doesn't just have to take this out. So what our goal is we want to time those signals into our targets. So like something like this, just random example, right? So if we can get that either in here, further up, doesn't matter. We just need to be able to time a signal, make a trade, and target the other side of the range. Once that gets taken out, we're either going to hold the trade because it keeps going, it doesn't reverse. We're going to reduce the trade, or we're going to exit. What we like to do is when we have full time frame continuity and we hit our targets, we like to hold because they tend to do this where it keeps going and keeps expanding. Gappers we'll talk about towards the end. But let me give you another example of this. So SPY, we had Labor Day. What we're going to see SPY did is this. You'll see it gaps down, right? And normally on gaps down, we look for 3 in the other direction. Same with gaps up. We prefer a 3 in the other direction. So it gaps down. If this was going to go outside bar, where would it go? Up into here, right? That'd be your outside bar target. Does it occur in one day? No, right? It's 10 points. So it takes a couple days. But you're going to see then, this goes green on Tuesday. Since Monday did not trade, this is the first day of the week. So when the second day of the week reverses, what is it trying to do this week? It's trying to go outside bar. Because if we reverse on Tuesday, or the second day of the week if we have a holiday, it is attempting to go outside bar as long as we've taken last week's lows. So you can see throughout this trading week, 2 down in green. Second, this is green, the week is green, you know it's trying to go 3. Then it goes reversal, 2 down, 2 up. And then it goes continuation, it goes 2 up again. Then they gap up. What does that tell you? They're going to try and go 3 in the other direction, and they do. So we're looking for 2 2s that occur Monday night or Monday and Tuesday. Those are 2 things we can look for. All right, so here's a question that we have. APLD. So when it comes to stuff like this, I'd rather just buy it Monday, but that's a different conversation. When it gaps, we'll talk about that, but same thing we've already discussed. We've already shown you how to do it. Because if you go to a 30-minute, what do you look to do? New lows to low day. and then it reclaims the lows. Where's it going? New highs. Boom. There's your winning trade. So on the gap up, we prefer to just not buy it right here if we can. Wait for that. Because this 2-2 reversal gets you in, and it doesn't reverse till right at end of day. And it's nowhere near where you bought it. But so if the higher time frame is attempting to take the other side of the other side by forming a scenario 3, the lower time frame may form reversal signals within that move, all of which fail before the higher time frame successfully takes the other side. How do we know whether higher time frame is failing to take the other side or whether the lower time frame should be ignored? There is no, so this is how it works. Time frame continuity is, it's not static. It's not like the day opens green the first minute of the day and it never changes. What happens is it either stays green or it doesn't. It either stays red or it doesn't. And it can change. Change occurs with signals and also with new opens of new levels. So if it's bright red yesterday, the new day opens and it's green, that's when change occurs. So in order to understand which way price is going right now, which is what matters, the 60-minute and daily are what we reference. Because the 60-minute tells us what's happening right now, regardless of what's happening this month or this week or today. Right now is the 60-minute. So in APLD's example, oops, let's just mark out, make sure it's marked out. Nice. So you see APLD. The week is green above 1371, right? So all week above 1371, it is 2 down in green, attempting to go 3. This is your target, 1573. During this trading week, there will be times where the 60 and day are not green. So what does that tell us? If the week is green, they're buying this week. If the day is green, the people buying this week are buying today. If the 60 is green and the day is green and the week is green, the people who are buying this week are also buying today and they're buying right now on the 60. And then if the 30 is green, they're buying right now during this 30-minute. And then you can go all the way down. Is the 1 minute green? If the 1 minute's green, they're buying literally like right now on the 1 minute basis. They're putting their orders into the market. They're shoving them in. So it's subject to change, right? This week they're buying. Cool. Right now, it's Tuesday at 9:30 in the morning. What happened? The 60-minute and day were red. So today and right now on the 60-minute, they were selling. This week they're buying. So what's happening? The buyer that was buying on Monday is not here Tuesday morning, at least to start. So the first 60 of the day, the seller's here. There is no buyer. But was that seller aggressive enough to change the week and cause the guys who are buying this week to take a loss? Obviously not, right? 1371. Did we touch 1371 on Tuesday? We did not. So when we go 2 down in green on the 60-minute, what's happening? The buyer buying this week is coming back and they're buying right now on the 60-minute because this week and the 60, they're buying. So the buyer is buying this week and right now on the 60. And then the next 60 opens, it goes green here and it reverses. Where's it going? Here. So what's happening? And let me just move this. Oops. Sorry, I wanted to fix this so we have. My trading view just crapped out on me. Come on. All right, here it is. I just want to make sure, I want to get this 60-minute down here so you can see what's happening. What the heck? So something's wrong with my trading view here. Let's see if I can just edit these. But while we're doing this, is this making sense, right? So the time frames, they tell you when the buyer or seller is there and how much evidence you have, right? If they're buying, let's see, come on. Looks like this is just glitched out. Weird, weird, weird. It could be because I have so many timeframes open. Let's change that. And if you don't understand it, I promise I'm just trying to make this easier for you guys here. Yours was messed up earlier too. Yeah, I think I just had too many open. Okay, but let me show you this, right? So we go to APLD on the 60. So you can see, right? And I'll blow these up so it's really obvious what's happening. So when all of these are green, they're buying this month, this week, this day, this 60, which means right now. If they're all red, right, they're selling. So when we look at this, on the 60, it opens red, the day opens red, the month is red. So this month, today, and right now on the 60 minute, they're selling. The only evidence of a buyer we had was the weekly buyer. But at this point, if they're selling right now and today and this month, we have no evidence of them buying this week. Because today and right now, it's going down. When this goes green, right now, we have evidence of a buyer. It's green. Right now. And the week is green. So we have an evidence this week and right now they're buying. And we can gauge the magnitude of that evidence. This buyer who's buying right now is, where are they going to buy to? High of day. What does that do? Well, if this works, we go 3 to the morning range, new lows and new highs. The day goes green here. So now they're buying not only this week, but they're buying today and they're buying right now. We have zero evidence of the monthly seller because this week they're buying. Today they're buying. Right now they're buying. No evidence of a seller. Therefore, anyone selling this month, they're gone. They're going to be forced to cover that trade or get out of that trade. You'll see it opens here, 1570, right at last week's highs. So that's the target. But then it goes green. They're buying right now, today, this week, and this month. That's full time frame continuity. It's going up for certain. The only thing you could say is maybe it reverses, but it's nowhere near changing these to red. And then you'll see as the day continues on, there's some shorts. It's only the 60. So you look at this and you're like, well, they're selling right now, but man, today, this week, and this month, they're buying. So what does that tell you? This is profit taking right now. They're still buying because these 3 are green. So there's profit taking, maybe new poorly timed shorts. And then boom, all the shorts get blown out right into new highs. And then you'll see they make new highs again. And then there's profit taking, they close red. Then it goes green again, right? Green, green, they make new highs again. So what's going to happen? You're going to go up into new highs. There's going to be profit taking, which creates broadening formations. Then it's going to reverse and keep going as long as this continuity stays the same. And you'll see how the rest of this week, it went green right here, all 3 of these, and it didn't change the whole week. This is what we want, because that's what causes the big moves. So if we go to really big moves, like, let me show you something like crazy stuff, right? And we don't even have to look at the time frames, although we can. But you'll see, right? When we have these time frames all aligned like this, that gives us higher evidence of that buyer, right? Same thing on the downside. So notice in here, right? There is some trades in there. However, what's happening? The month is bright green. Notice the week. See how it's like flat? This is what we call a chop shop. It's doing nothing. This week, they're barely buying, barely selling. We want nothing to do with that because we want long green, long red bars. So you can see sideways, chop shop, right? And it's going to alternate up, down, up, down. Then they all kick green here. Notice this day, this week, this month, they're buying. And then you're going to see we make some slight lower lows back in the direction, all time frames green. Lower lows back in the direction, all time frames green. Some slight profit taking right back in the direction. And we have a slight gap down, right? And you'll see the day, the 60, they're taking some profit. And we have some slight lower lows. We have the 60 minute right here. It breaks all time frames green. Anyone short in here, they get blown out of their short trade. So hopefully this is making sense. I want to get into the more systematic stuff, That's just important to understand what we're looking at. And you don't need these indicators, by the way. It's just a good way to like teach this. I would highly suggest looking at 4 time frames, meaning when you look at a chart, you'll have the 60 day, the week, and the month always open. It doesn't have to be these 4, but at least 4 time frames. Because when you do that, you, like we've shown, right? You have more evidence for your trades if they're all aligning, or you also know when things are changing. The indicator, I believe you can use, I'll try and copy it. TradingView, does not like this indicator. So I'm going to, I'll share it. I'm not sure if it's going to work, but if that doesn't work, I can try and share the chart. Let's see. I believe Sarah's going to be back on Ninja Live soon. There's a lot of chop. So when things are sideways and flat, you just do nothing. Because you can be picky, right? Like imagine being a baseball player and you can just wait for the 40-mile-an-hour, just like, the ball that comes right into your hitting zone. You just wait. You'll hit, everyone's a home run then if you wait, right? Or at least most of them. Sometimes you're going to miss. If you don't do it that way, you can take every signal, but your win rates could be, 50%, give or take, and you can still win. It could be even 40%, you could still win. Just because what we're doing is we're catching, actual algorithmic buying, and it tends to work when you're correct. Indicators, I suggest 0 indicators. You don't need them. I really only use them to show people things because people, unless there's an indicator, they're like, they can't focus for some reason. Like for me, I like this. No indicators. The only thing I do like is having the time frames because it makes it easier for you to see what's going on. All right. Are you guys ready? Is this making sense? I know we have some new people. I know we have some, people that have been here. All right, cool. So like we said, one of the strategies we like is the reversal on a Tuesday. Does this happen every week? Across the whole market? No. Across singular stocks? Yes. So the question then is what are we looking for? So we know, right? We want to see the month, right? We'll say it's the month like this. We want to see the week like this and the day like this. We want to see them line up. So if we know this is true, what do we want to do? We want to have 2 ways of doing this. At the beginning of the month, the end of the month, we can trade against the monthly open because at the end of the month, that's when you expect profit taking. So if you're shorting all month, you're getting to the end of the month, maybe the end of the quarter, you exit the trade or you reduce your position, which causes price to come back off the highs or come up off the lows. At the beginning of the month, what's happening is positioning. So when we're trading, about 70%, probably more at this point, it's probably closer to 80%. A lot of these studies are a couple years old at this point. But something like 70% or more of trading is done algorithmically, meaning any hedge funds, Goldman Sachs, BlackRock, whatever they're doing, investing in, getting in and out of, as well as, your 401ks, which are managed by gigantic companies and whatnot. They are algorithmically trading, which means they're like, well, based on our mathematical models, we need to put 2% of our money here, 2% here, 10% here, blah, 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 blah. They send that information to the trade desk. The trade desk goes, okay, right? And this is how it used to work. It might even fully be automated now. But the trade desk is like, okay, cool. We're going to go enter these trades. The way it does that then is it goes in to go buy and take the offer and get as many shares as possible to fill the order, which causes prices to go higher. So when we're looking at this, right, we're like SPY, when we're looking at SPY monthly, every time the month is green, what are the algorithmic trading, or in what direction is the algorithmic trading going this month? Up, right? So if they're buying this month, it's going to be green. So it's buy, 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 slightly red and then green, buy, slightly red, then green, buy, right? That's all that's happening. So when all the time frames align, the algorithmic trading is in your favor for sure. Now, because that's true, what we want to do is make sure those time frames align and look for our, in this case, 2-2 reversal on a Tuesday or a Monday. So how do we do that? Well, let's just show you. So if we go to Monday night, and this is our scanner at stratalerts.ai, if you don't know. If we go to Monday night, we can scan, and it looks like I just got disconnected. Let me reconnect. Give me 1 sec here. Gotta log in. Yeah, if you let it sit long enough, it'll log you out. All right. So we go back and we go to Monday night. This is what we can do. So we can look for the current candle, or we can look for the setup category, 2 down and green. And you'll see in this case, we have 83 names. And when I say 2 down and green, what do I mean? Well, you'll see LLY. This is on the 8th. This is Monday. See how it's 2 down? In this case, it's showing red. This is just something we've overlooked. We got to switch this. But it's 2 down, and you'll see it's above its open, so it's green. So what is it going to do Tuesday? It's going to try and reverse. Not every Tuesday will it, right? Sometimes they fail. However, it reversed, and then you'll see Wednesday they buy more, Thursday they buy more, Friday they take their profit. So this would be like a standard trading week. Now, it's not just LOI, right? We have 83 setups. So what can we do then? Well, we can go through these and we can look at their charts. And we'll do a few just to show you. And there's a lot of tickers on here that I'm not, or I don't know about. But let's just go through some. So some of these will not be trying to go outside week, meaning you'll see Monday, 2 down and green. Tuesday, it did poke up, right? Now, is this trying to go outside week? No. This was inside of last week's range, because when it reversed Tuesday, we were still an inside bar to last week. Therefore, this is not going to fit what we're talking, or what we've been talking about. However, it was still a reversal. What happened was they tried to go up Tuesday. What happened? They came back into the range. Where's it going to try and do? Or what is it going to try and do? It's going to try and take the other side. So this is where people have struggles when they're trading stuff that's going sideways. Because when it's going sideways, you're taking new lows out, rejecting, taking new highs out, rejecting, right? And you get chop, 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 big move, you miss it, and then you overtrade and you get killed. The reason that happens is because of taking trades where you can see all of these 3 bars are within the previous range. What we need to do is time signals. This goes for all signals. After new lows, after new highs. Doesn't mean it has to be, but we prefer that because that will help us not get stuck in trades like this. We'll keep going. So now this is one where we can show you why the multiple time frame analysis matters. So you're going to see the month, right? If we just mark out the month open, and we do have indicators that do that. If you do TFC opens like this, it'll be by T3. Sure, my labels are on. Okay, so you can see this. Very similar. But you're going to see, so 3, we went 2 down in green. That's something we look for. Where is this occurring, right? On a monthly or a bigger time frame basis, right? You are at the bottom of the range. We're going into new lows. If we go to like a weekly, a couple 2-week chart, you're going to see the broadening formation easier. New low, new high, new low. So there was a chance, right? It could have reversed. However, what we'll see, so we made the new low. Notice how when this ticks up, if that's above Monday's highs, we're also going to be above this weekly open. which is right here at 296.48. But it needs to be above that. We also need to be above the day. Why? Because you can see how continuity is going to change. If we're not green on the day, and therefore green on the 60 and green on the week, the month, you'll see the month is still red. So this month, the seller is more aggressive. When the week was slightly green, right? We did have evidence of a buyer this week, but they did not change the month yet. So the only evidence we're going to have to work with would be that 60 and daily. So when they open the day, if we mark out this signal, you see we open the day, they tick up like super slightly, and then they go red right away. Are they buying today when that's red? No. So whatever buyer that was in there Monday, on Tuesday, they tried, but they're not strong enough to do, like they did not come back to buy more. The whole day was spent under this daily open. So you can see today they're not buying. This month, they're not buying, they're selling. This week, very slightly green. So if the day is red, we have no evidence. So even if we wanted to take that signal and we're watching it, continuity tells us, is it actually happening or not? Because if it was actually happening, the day would be green because they'd be buying today. The 60 would be green. They'd be buying right now. The week would be green. They'd be buying this week. So when it changes, we have no longer do we have the evidence. And this is what causes people to struggle with the strat, because the evidence is subject to change. It's what we know to be true right now. So when this opens up and it's not above yesterday's highs, it's not green, we can't buy it. And if we were trying to buy it, we're out of it. Didn't work. And then in this case, you'll see that since they rejected Monday's highs, what did they do? They go and take Monday's lows out. And this is another part of the strat that's important, is if we know continuity can change, it can be full time frame continuity down, then it can reverse. And then the week and the day and the 60 are green. And now we have control, at least to move in the other direction. And then it reverses again. We go back to full time frame continuity down. We can trade it both ways. What matters is not that we're right. What matters is that we're willing to trade what's in front of us. And it's not like a market that's like in a really small range and just going sideways. So when we look at this, if we were trying to buy it Monday, let's say we try to buy it, we get stopped out, so be it. Or on Tuesday, I mean. Could have been buying it Monday, but on Tuesday. If it closes like this on Wednesday, what can we do? We can target to take out Monday's lows, and what evidence would we have? We'd have the 60, the day, the week flips red right below Tuesday's lows, and the month. So we have more evidence down than we had up. So this is why it's important to know when things are happening does matter, because this was happening second week of September. So it would have had to change September's open. And let me show you, I have a very good visual just specifically for this. So you can see, right? This is the difference. When things occur matters. The top example, notice if we just zoom it in, and this is so important. We just zoom it in and we're looking at just the 60-minute. See how we go into new lows, and then we go inside? That's another signal we look for. See how we go into new lows and we go inside and they look the exact same? It's always going to look the same on the 60. What matters is the bigger time frames, because those tell you the evidence you have for that to work. So you can see on the bottom one, which looks the exact same, the month would be green if that 60 breaks up. The week would be a 2 going 3. So we know it's, trying to go outside week. The day made a new low and it would be green. So if this 60 reverses, the day, the week, the month, they're all going to be green. If this 60 reverses, the day's still red, the week's still red, the month's still red. Even though the 60 chart looks the exact same. This is why it's so important, right? And you can see it's going to look similar, but the amount of continuity is what's going to give you the evidence. So let's just keep going through this. And we'll do inside on Tuesday. So I guess that's something we can also mention. So if we're trading 2-2 on a Tuesday, if it goes inside on Tuesday, we don't have to trade it. Same thing. Needs to be above Monday's highs and actually going. 1 second. We'll go over here. So now I want to show you another thing we can do to add evidence. When we go to hit our scans, if we're looking, in this case, 2 down in green, we have 83 names, right? And you can see some healthcares in there, right? We have some of that going on. That's about it. If we compare this to the previous week, and it was Tuesday, right? Because we had that Monday day, we did not have anything going on. It was a closed market holiday type thing. But if we go in here and we look, and this is specific to our scanner. But now when we look at the scan, you'll see 83 was what happened this week. The past week, we had 200. So we have how many more potential reversals? Over double. And what we say is, when it comes to having high evidence, yes, continuity does matter. Yes, signals matter. And reversals and broadening formations. But the overarching part that really matters, since we're messing with algorithmic trading across the whole market, is how much of the market's actually doing that. So if you want stuff that's going to be like 85, 90% win rate, this is where it comes from. So when we look at this, we see 200 names. What that tells me is potentially the whole market's trying to set up a reversal on the second day of the week. If we look at our statistics, how much of the market was 2 down in green on the first day of the week? Well, materials, 90% were 2 down, but half of those are green. That's about 40% of materials. Energies, 60% were 2 down. Over half of those were green. That's like 30% of energies 2 down and green. We also had about 30% of energies going up. Industrials, 2 down, 90%, about half of those are green. 45% of those are 2 down and green. Right? We can work through this and you can see green, 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 green. If you look at the SPY, 80% of SPY went down on the first day of the week. However, half of those are green. 85% of NASDAQ went down first day of the week. However, over half of those were green. So what is this telling us? We have turnaround Tuesday across the whole market, which is a lot stronger than turnaround Tuesday on one stock. Why? It's because you have these institutions trading in and out of big positions, right? They're moving money between sectors and whatnot. And if you've ever seen a sector rotation chart, right? Like everything's like a cycle like this. So it's like, we're going to buy home builders this quarter. Then next quarter, we're going to go buy energies instead. And then we're going to go buy consumers. And they just kind of go in and out and in and out. So when we see the whole market set up a reversal, the whole market's about to reverse. What does that tell you? The algorithmic trading is about to completely change directions in one day, right? Because the first day they were selling, second day, now they're buying all of them. So when this sets up, now we have turnaround Tuesday or the 2-2 reversal with certainty. Because if they all reverse come the next day, we can be certain that's going to work. And most people, most traders don't talk about certain because they don't have in this, the simultaneous breaks, but certainty can come from the simultaneous breaks. So for example, you can see the next day, right? So we were looking at Tuesday, 2 down in green, Wednesday. What happens Wednesday? 66% of the financials are going up Wednesday, right? Prior to that, what do we see? 90% of financials going down, but about 60% of those green. So what happened? They didn't go out and reject all of these, reverse to the upside on every sector, but they went and bought financials, which matters to us. So we're going to switch back over. You can see they also bought consumer cyclicals. You can see they bought technology. You're gonna see they bought some industrials, some energies, right? Some of those were red, but they did come around and reverse those. So in this case, we would say financials were leading and then tech was leading. And you'll see financials is green, which tells us it's leading. Really cool. So when we go in and we look at financial stocks in general, or the market in general, we're going to see on the second day of the week, most of the market reversed, right? We go to SPY, we go to Qs. So Qs and SPY reversed. Dow Jones also reversed, is 4 cents, but that's a higher high and a higher low. That's a reversal. IBM also reversed. So what is this called? It's called a simultaneous break. So when the whole market breaks a scenario 2 or a reversal, it's gonna be the same thing, in one direction, you have certainty. As long as that doesn't reverse, it's going, right? Because the algorithms, they were turned off or they were selling, and then they flipped them and they're like, now we're buying. Boom, gone. So when the simultaneous break happens with any setup, could be our turnaround or 2-2 reversal setup, could be an inside bar, doesn't matter. You have high evidence for that to work. So in this case, we saw it across the indexes. You'll see the discretionary, right? First day of the week, 2 down. Second day of the week, 2-2 reversal. Where's that going? It's trying to go to the new highs, and then it does. If we go to industrials, you'll see those actually continued down. We go to financials. Let me make sure we're on the right week here. This was last week. Yep, 903. 903. So in this case, financials, XLF went inside, but we did see a lot of the financials reverse. In this case, they made the higher lows and they continued through. But this is where you can see, right? It did go inside, so we're not going to trade that, but we can trade the ones that did reverse, which were like the indexes. We'll talk about I don't know if we're going to get completely to options, but we can talk about that. So what we want to do then is we want to time the signals. Could be 2-2 reversals. It could be inside bar signals, the tops and bottoms of ranges. And we also want to time simultaneous breaks with those. And ideally mush all that together with full time frame continuity. Because when you do that, you have the whole market reverse on a dime, which gives you high evidence of algorithmic trading. You have full time frame continuity, which tells you there is no seller or there is no one trading against you. That's correct, because everyone's going in one direction. And with the simultaneous break, you have the high evidence that's all going to keep going. And the reversal is what allows you to get in. So when we go back, when we see SPY reverse in here on Wednesday, that's what allows us to get in. And we know what a reversal looks like. So you'll see we have lower lows, lower highs. It's going down, higher lows, right? In this case, right at previous day's highs, higher highs, higher lows, higher highs, and then gap up into the top of the broadening formation so they take their profit. And then you'll see, in this case, inside on Monday. And the inside bars, we didn't talk about it because you have the rev strats, but 3, so higher highs, lower lows, so it takes both sides of the range, broadening formation. And then higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So it goes up, they take some of their profit, and then they continue with the full time frame continuity, where you can see, right? The month, the week, they buy, take profit, they're still buying. All these time frames staying green down in here. As far as the scanner and futures, we do not have futures in the scanner yet. If we get working with T-Trades like we want to, we're planning on it. Just, everyone's really busy. That's something we can literally plug in and have set up tomorrow or a couple days if we wanted to. So it's possible. It's just expensive. So we need the customers to actually want it and pay for it. But the link, yeah, everything's always posted. But now let's dive in. So we can do this on any time frame, but let's start at the big ones since that's what we preach. So we'll go to today. Oh yeah, 1 second. Continuity is always determined by the 60-day week and month. If volatility increases, you can drop that. So you can go like day, 60, 30, 15, 5 minute for intraday continuity. So if the VIX is at 15, month, week, day 60 for sure. If the VIX is at 30 or higher, then you can use like the weekday 60, 15 or 30. Or you can use the day 60, 30, 15. So things are really moving. And this is important, so I'll share it here. But when things are really moving, it's like, let's say this was like a standard move prior, right? So like this is what the market looks like. And then all of a sudden we're doing this type of stuff, right? So notice, let's say if this was each day, right? Day 1, 2, 3, 4, 5, just all the way through. Low volatility. This would be like a VIX of 15 or lower. And then we get a spike in volatility and see how it increases, right? Where this whole range is bigger than, you know, like 2 weeks worth of trading back in here. So if you're getting a monthly range in one trading day, the daily is now your monthly chart, right? If the month was moving plus or minus $3 each month, and now the day is moving $3 a day, that's now your monthly chart, the daily. So if the daily is your monthly, then the 60 is like your weekly chart, right? So each 60 is a new trading week. Does that make sense? And then the 30, or let's say the 15 would be like your daily chart, and you can just work your way down. So now you can take a month's worth of trades in one trading day because you can shift with how volatile the asset is. So if you're like dead set on trading, you know, real estates, which are normally lower volatility, right? Like you're dead set on trading real estate in here. Well, you probably should be on like a quarterly or yearly chart because it's just not moving, right? It's like, yeah, it moves 5% in a month, right? We have stuff that does that in a day. Like APLD did 76% in 4 days. So it's like you could spend 2 years trading real estates, or you could spend one week trading APLD. So hopefully that makes sense as far as, you know, timeframes and whatnot. Which is why, like, when people are like, well, we always want to match up the daily with the 60-minute charts. Like, well, what if the VIX is at 100? Then what? It's like not going to work. So we need to make sure we're sliding our timeframes with volatility, and we tend to stick to month, week, day 60, and then during the open, when volatility is increased, you can go to a 1, 2, 3, 5 minute chart, like lower timeframes. As the day goes on, you move up from like the 3, 5 minute charts, like the 15, 30, 60, and stay around there the rest of the day. But the same thing applies just across the board. But you can see real estates, right? If we go to like a yearly, inside year. So if we're a yearly guy, because this range is, you know, 18% this year. If we're a yearly guy, we're just not doing anything. We're waiting. Maybe next year, right? In 3 months, if this goes inside bar break, then, you know, we have all year. We can go in there on the weeklies, the monthlies, dailies, and trade that. Time frame for broadening formations. Just like we said, we use all of them. So month, week, day, and 60. I would suggest if you're going to be intraday trading, like let's say, for example, so when we're looking at, let's just say we're doing the trading, like the whole trading week. So this is the weekly open last week, right? This is Monday. So Monday, the week actually opened as an inside bar. So when we open inside bar, it tends to set up your broadening formation, which is good for us. But when we're trading, we want to make sure we're timing the tops and bottoms, not only during higher time from inside bars, but all the time. When we are a higher time from inside bar, so like the week is an inside bar, or like real estate, so we just showed you the year's an inside bar. We need to know that. Because what that tells us is the broadening formation, since an inside bar is like this, it's going back and forth forever. Broadening formation's in there, right? It's going new lows, new highs, new lows, new highs, new lows. So when we look at this, we open inside week and inside day on Monday. We'd prefer to just not trade it. But what happens is you make new highs, or you make highs. You'll see we make some lows. Then we make 1 penny lower. This was on Tuesday. A few pennies higher, and then they close out, right? Give or take. So maybe like $1. So slight lower low, slight higher high. So when we're doing broadening formations, if we're trading this week, we better be looking at those 30 broadening formations, right? Those 60 ones. If we're trading this month, we're trying to create swing trades. We probably want like the 60, 4-hour day, those types of broadening formations, because throughout the month, if we go to like, let's think from last month. So if we go to SPY last month, just for example, go to like a 4-hour time frame. So you can see on a 4-hour time frame on SPY last month. So this is where the month opened. Notice how the first day of the month went down. Monday went reversal. Now what? The month went green. So you see how the reversal on first day of the week. Look at this. The month, the week, the day, the 60-minute, they were all bright red. And then new week opens. Boom. They all go instantly green. All these shorts got in trouble, right? But what's going to happen? You're going to see we have 3. New high, new low. That's a broadening formation. So a 4-hour outside bar, that'd be like a 15, a 30, a 60 broadening formation. If we go in here. So you can see this. And this is why we have to look at all the time frames, because that makes it really easy. You can see they make the new highs. The 4-hour went 2 up in red. What caused it to go 3? Well, we had the reversal on the 30 here that reclaimed the morning highs. We also had the 15. We also had the reversal on the 30 right here. You can see how that brings it all the way back in and creates the broadening formation. Makes the new highs, makes the new lows. So the week and month, they're buying this week, they're buying this month. Right then and there, they took some profit. So what do we want to be doing? We want to be timing signals down here in the direction of the week and month when that continuity changes. So we just let it play through. Right here, you can see the day opens. We had a 3. It's a broadening formation. And what do we do at the daily open? We can use the 3-minute, the 5-minute, 1 minute, right? Some people even do like 15-second on the futures, crazy stuff. But let's go to like a 2-minute, something kind of in between. So on a 2-minute basis, right? We know we have a 4-hour broadening formation like this. We're at the bottom of it. Where's this 4-hour broadening formation? Well, if this is the bottom of the 4-hour broadening formation, the month opens here. The week open is here. So the lower low on this broadening formation is above the month and week. This month, this week, the buyer is more aggressive. So it's more likely to go up off of that. So what do we want to do? We can time and just use the 4-hour. Be a swing trader. We're going to risk a little more money. Use the 4-hour chart or daily chart, whatever you want to do. Or we can time the 2-minute broadening formation at the open, or the 15-minute, 3-minute, whatever it is. We can time that same broadening formation, this little one, at the bottom of the much bigger 4-hour broadening formation with full time frame continuity. So notice what happens here. We make new lows to lower lows to low day. So this is our broadening formation, new low. What happens? Well, this was the second. So you're going to see this. The day opened right here. The first 60 of the day opened at 8:30. They start the broadening formation here, which is why we don't have to be the first one. Like we were saying before, Alex, what do I do when it's all choppy like this? Nothing, right? Look at how flat this is. Look at how flat this is. So if it's flat, you don't have to touch it. Compare, see yesterday's daily bars, continuity bars, long red versus today, green, red, it's going back and forth. So we can wait for the broadening formation to get big enough, and we can time this inside bar signal risking this low, or this inside bar signal risking this low, or the 5-minute, 15-minute, 30-minute signal, whatever we can find. And if that works, we have very small risk, right? We're looking at this. And even if we buy it like in the middle of the range, right? If we're late to the trade, very small risk, because if this works, we know where minimum we want to see this new high, is we know lows, new highs, new lows. Where's it going to go? New highs. Do we have full evidence? Right here we do. Continuity changed. Full time frame continuity up right here off the bottom of the broadening formation, which is very important. So all of it lines up and you have that buyer. And if you missed it, all we look for is lower lows to get back in there. You'll see slightly broadening formation here, right? Lower low and then reversal. Slight broadening formation here, lower low, inside bar, reversal, right? And then right here, broadening formation here, lower lows, hammer to reversal. So you can see until we hit this target, any broadening formation we can find, we can play, which also does mean, right? If you're a 2-minute guy, you could have been in here. Buy this, where's it going to go? New highs to that. And then it takes profit. And you'll see higher lows, higher highs. So personally, I don't like trading off these higher lows. I want lower lows. Where's the next lower low? This is the only trade right here. The next one's here, 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 here. So 1, 2, 3, 4, 5 winning trades. Just because we know we want to trade up in the direction of continuity, we don't have to take the shorts. And you know, you could have taken shorts if you want, but we want to trade in the direction of all those time frames. Breaking the higher low is currency pairs. That's something we can do. We just haven't targeted that market. Every time I get someone that asks, I say, start a strat Twitter account, only post currency pairs, post your trades, post on YouTube, gain a following. We'll put it up and we'll literally make all the software for you. And we'll give you a nice commission check too if you want, if you want that stuff. There has to be demand for it, which I know there probably is, but I'm not the one creating it right now. All right, we've been going about an hour and a half, but is this making sense, right, guys? Or is it not making sense? And we can go through and we show you more examples here of what this looks like. We're going to remove all those indicators here. If we go back, just look at any of these months. We just make it really simple. Right? So you can see the month went green here. What are we waiting for? Broadening formations. Right? You have some slight lower lows or higher lows. Slight higher lows, higher highs, lower lows. Right? What's it lower than? It's lower than this and this and all of this. So you make the lower lows, then the big, nice, easy move. Then what? Lower lows, then the big move in the direction of the month. Then in this case, right, towards the end of the month, this is July 31st. What do they do? Profit taking at the end of the month, like we say. You'll see the lower lows, the higher highs where profit taking will occur, profit taking, more selling, and then new month here. Same thing. You have slight higher lows, which you can trade on an intra-week basis. If you're waiting for the lower lows, is here. Lower lows to that. Inside signal, boom, easy winning trade. And we can keep going. This was the monthly open here. First day of September. What did it open into? Lower lows on the day to this and to this. And then reversal. And higher low, higher highs, they take their profit. Higher lows, higher lows, higher lows. Right? And if I turn the indicator on, you can see if we turn off, right, you can see lower lows, lower lows, lower lows, lower lows with full time frame continuity back in the direction. Those are the signals we want to time. It's when it's in the moment. Well, what you need to make sure is that you are, like, you have a checklist, right? It's like, what's the next two? So if I'm taking a daily signal or a 4-hour signal, okay, the next two, it'd be a 2 up on the 4-hour. Right? Let's just make it simple. So you go in here. So we see the inside 4-hour, or we see the inside day. It's the same thing. So inside day. Where is this happening? Well, we had the higher highs, and you can see we're coming back into lower lows. In this case, this was the low, and you can see it's lower than it. Doesn't matter that it's lower lows or higher highs. What matters is, did you take out buyers or sellers first? So you can see they bought, then they brought it back in, then they buy again. So the market's constantly moving like this, up and then down and then up. Most people see it go up and want to buy here. We need to wait, goes down first, then we buy in here to make it take that out. Right? And that's all it's all that's happening. We call it triangle out, right? They buy it. I want to buy up here, Alex. I'm a breakout trader. Have fun. Boom. Alex, I just lost all my money. Right? Stops them out. And then it reverses to target the other side. You see it goes up, stops them out, then goes. Right? And sometimes it's lower than this, sometimes it's higher. What matters is, did you take them out? Right? These buyers bought, you took them out, now you're going to go. Right? These guys bought in here, you took those guys out below this, then it goes without them. So we need to think like that. And then we need to time the signal. So if we're playing inside bars or 2-2 reversals, we want to line those up with each other. And then we want to ask, how much continuity do I have? Where's my evidence? So when SPY reverses right here on Wednesday, 2 down, 2 up reversal, is the week green when this gaps up? Yeah. Right? It's almost 1% away from the week open. Good luck changing that. Did it come back red a little bit? It did, but did it change the week? No, they're still buying this week. So what was that? Goes up and then takes them out, and then it's going to go. So if we look at the week, you can see, right? The week opens here. It goes up. Then it takes them out. Lower low, that's a buy. Then it's going to go. Then it gaps up. We don't want to buy on the gap up. The only way we can buy it is it goes up. Then it takes some guys out. Then it goes. And then it takes more guys out. And then it goes. You see? Right? And there's going to be ones where it fails. That's fine. So it makes a new low here. Reverse. Tries to go. Takes you out. This would be an entry here. A stop here. It's such a small loss. It does not matter. As long as we're thinking in these terms. We can turn this off. But you can see throughout the week, there's going to be a million examples of this type of stuff happening. You can see the same thing in the highs, right? Goes down, then it takes them out. Oops. Goes down, takes them out, then it goes. And then you can see it goes down, takes them out, and then we bring them back in this case, some slight lower lows to this, then they firm up. But it's making sure we're timing it with the broadening formation. Because you can have a really bad strategy, right? And this is not to say this is bad. But I'm saying you can have a bad strategy where you win 30% of the time. But if your winner looks like this, let's just say we took it into this trade, just for an example. If your winner can look like this, and you get that 3 out of 10 times, or if it looks like this, and you can get that 3 out of 10 times, ideally all the way up into here. But if you can get that 3 out of 10 times, does not matter, as long as you're risking the same size. If you're putting 25% of your account in a trade, 50%, 100%, never going to work, right? Unless you have a 100% win rate, you shouldn't be going over like at most 10% allocation in your trades. Now, if you're like confident and you have, insider trading knowledge or whatever, right? Simultaneous break, that's when I want to put half my account in the trade. If you have something like that, simultaneous break ideally, then you can start, pushing. But we need to make sure we're not entering trades with such a big size that if we lose 2 trades, we're done and we're out of the game. We need to be able to lose 10 and still be able to trade the next day. Gappers. So when it comes to gappers, the day in 60 is what matters. When you have news, if you have no news or relatively no news, then everything still matters, right? The month, week, day, and 60, that still matters. But when you have news, just think of it. It's like UNH comes out. Yeah, the government's going to cut the amount they pay us by 50%. and 80% of our revenue comes from this thing the government's cutting by half. If you are a yearly participant and that news comes out, when the day opens, are you going to be doing something different than before? Probably. So when the day opens, the yearly group changes what they're doing at the open of the day. That's why gaps matter, because when a gap happens and there's new information, not only do the buyers and sellers today change what they're doing, but this week, this month, this quarter, this year, this decade, the past 100 years, everyone changes what they think like that. So when the gap happens, like let's just say SPY, for example, right? Gap up on SPY. I'm not sure if there's news or if there was yes or no. But let's just say there was news and maybe it's like really, really bad news. You know, it really doesn't matter, right? But really bad news. Gap's up. Anyone buying this week, they're like, shit, that's not good. I need to get out of my trade. It goes up a little bit and they're like, maybe I can hold it. It actually looks pretty good. And then whamp, what is that? That's a 3. Oops. So you see 3, whamp. All right, now I need to get out of this. This looks bad. Everyone gets out. Anyone that was trading this week or today or right now, everyone's selling. So when news hits the market with gappers specifically, that level it opened at, the daily open is what matters to us, because if it's below it, they're selling based on the news. If it's above it, they're buying based on the news. And obviously the broadening formations can change that. Like if we, let me think, who gapped recently? No, UNH gapped recently. Right? So you can see. So UNH gaps up. I believe there was recent news and could be wrong, but on the gap up, right? Does continuity still matter? It does. Are they still buying this week and this month? Yeah. Are they buying today as of, the first 45 minutes of the day? Technically, no. On the 60, were they buying the first 45 minutes of the day? Technically, no. Right? But do we gauge magnitude? We do. 2-2 reversal, where's that going to go? There. So if this goes reversal and it takes that out, what happens? Everything goes green the second we make new highs on the day. So the buyers this month, this week, they came in today and right now and they're buying. So we can change that, right, with our signals, but the gap, that level, that daily open is what matters to us. And then let's say you missed that, right? What are we waiting for? We have the month and the week confirming each other. So let's go to like a 60-minute. Lower low, and then it takes off, right? They buy, they stop out, we buy. That would actually be super good logo for the strat. That's a good idea. We're going to write that down. So that being said, how we can leverage the scanner, and we also have some other stuff we're going to end off with, but leveraging the scanner, we can look for our setups, right? 2 down and green, 2 up and red, but we can also take our setups and filter via higher time frames to make it simpler for us. If we go to the day, just say we're going 2 down and green, today there's not as much, but we'll just copy it over anyways. So if we click this little visibility symbol, or apply visible symbols to search box, we can copy all those names, clear this out. We can go to the month or the quarter or the year. So we go to the month, paste those symbols. Anything that's 2 down and green, we want to be buying into a green month, right? So we're going to filter and say we want the green month. And we are going to be adding in the future, I think we're going to be adding timeframes to some of this. We already have it on the strat algo alerts, which currently is not populated. But if the green month is true, you're going to see we can also filter it by the greenest. So we want to trade the greenest months, the reddest months, when we're buying and selling. So we just go in here. I haven't looked at these yet. I haven't done my weekend video stuff. Go to TLN. So you'll see it's not a hammer, but it is 2 down in green. Notice the month is bright green. So when we look at this, you can see how if we reverse tomorrow, or not tomorrow, but the next day, weird. Sorry about that. But you can see, so 2 down in green, right? If we reverse tomorrow, every time frame's green. So we have full evidence for that trade. Now, is this, the best trade in the world? Maybe, maybe not. What we prefer is we want to go back through a range so we can stop people out. Right now, where's that occurring? Right at the top of the broadening formation. So either that works and we tick up into the highs and expand, right? Getting a bar that looks like this. We can expand and get that broadening formation going bigger. Or, we tick up into the highs and then that's it. We get more broadening formation or bigger broadening formation. It goes tick, 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 tick. So maybe, maybe not, right? We want big ranges to come through. We go to VST. And there's a lot of nobodies on this list, just so you know. But you can see VST. So we look at the weekly, the monthly, big time frames. Notice the week. 2 down, 2 up week. When did that occur? And this is another really cool thing about the strat. The second week of the month. What is that doing on the second week of the month? It's trying to go outside month. So a 2-2 on the second day of the week to go outside week. 2-2, second week of the month, go outside month. It also applies 2-2, second month of the quarter, go outside quarter. Let me show you that one. And sorry, I don't want to, go crazy on you guys, but it's so important to understand this. It was just brought into my mind. But you can see the quarter, 3 on the quarter, 3 on the quarter. So look at SPY. Did this 2-2 month cause an outside quarter in the second month of the quarter? It did, right? Did this 2-2 month during last quarter, or the previous quarter, cause an outside quarter to the downside? It did. So the 2-2s are always causing outside bars. 2-2 down, outside bar. 2-2 up, outside bar. Just a matter of picking them and getting onto the ones that have a target, right? We go to back to VST. So it's 3-2-2 quarter. Right? You see how the 2-2 month here is causing all that stuff to go back through the range. This 2-2 week causing the outside month. It didn't quite cause the month to go outside yet. So on the way up, we have new lows, right? 2-2 reversal on the day, which could cause us to go outside month. So we have these to target back through a previous range. And do we have long green bars? An aggressive buyer? We do. When did this buyer show up? Here, right? And then notice the first guys bought, the first guys had to get out, and then we want to buy, right? And if you were the first guy in, that's okay. Stop out, get back in right here on the inside bar. But you can see, right? We don't have to be that first guy in. They buy, they sell, we get in. And then there's some selling in here, and then we can try and get this too, if that breaks above 210.22. And then as far as stop losses and risk management, we want to manage our risk to a lower low, ideally. Now, when we're trading breaks like this, we're going to use the daily open or the low of day. But ideally, what we want to do is, if we're trading this come Monday morning, we can look at this and say, okay, well, like 15-minute, right? You see it's grinding up. So what do we want to see Monday morning? We want to see gap down buy. Because we want to go into some new lows, see it go green on the day, back through into this high, where we can do something like this. We can buy it once it goes green on the day, risk against a lower low, look to trigger the day, and then potentially trigger the rest of this. So you can see we're always going to want to time the broadening formation in the direction of our continuity. Always. If you're buying up at the highs, not a good idea. If you add at the highs, that's okay. Because if you add, you're risking your profits instead of your account. But we always want to enter trades off lower lows, ideally. And that's not to say you can't trade this reversal just off the daily, but I like to tighten it up. We go to COHR. 2 down in green day, right? What is that going to be? Well, there's your broadening formation. like so. You see 2 down and green day off. It's taking slight lower lows. That would occur with every time frame green. We go to the month. What's the month doing? It's currently a 1. So remember when we said we want to be careful when we're inside of bigger time frames? Still true. Now, we can also see we had a 3 last month, which is going to make it, it's going to be a little tricky because we'll have to see which one's in control. So either next week, right? The weekly goes green, the monthly buyer comes back next week with the green week, and we're continuing. Trying to go back up here during the inside month. Or the monthly buyer's gone, the week goes red, we go reversal on the week, then we're trying to take out the low of this broadening formation, which you can see, right? If we zoom out on the day, lower low, notice higher highs. They've just been going to the highs. So either we reverse up, trying to continue, or we reverse back into the range, trying to go back through these guys. And since the month is really green and inside, you get the chance of getting stuck in the middle of this stuff, which is why we prefer not to be in there during inside months. Let's go to JBL. So you see 2 down and green month. This is coming straight from the strat scanner. It's going to have our 2 down and green day, right? Where is that occurring though? Higher highs on the day, like this. So you can see, do we prefer to buy up here? No. Where would we have preferred to buy? Well, if we scanned with full time frame continuity, the day, the week, the month green with a 2-2 reversal, notice second day of the week, it reversed. 2, 2, 2, 1. You'll see they made the higher highs here. So what did they do at higher highs? They take some profit and then they firm up. Rev strat, or the 2 down green, 2 up reversal, goes into even higher highs. And then what do they do at higher highs? They're taking profit. So we could go 2, 2, 2, or we would actually prefer, or at least I'd prefer, take the lower lows out first so we can have a broadening formation where they buy it, they sell it, and then we get in. Right? NVIDIA. So NVIDIA last week, second week of the month, what happened? Reversal. Where's it going to go? Outside month, right? We go to the month. 2 down, goes reversal week, changes what's occurring. It's trying to go up there. The day is 2 down, right? And comes back into the range. And you can see we have some sellers to trade against in here, so that's a good thing. We'd be aiming to do this little daily broadening formation. So maybe, right? You're like a 60-minute. You'll see it's chopping them up a little bit, so just gotta be careful. But you can keep going. Etsy. 2 down, hammer. Notice, see how this is slightly different, right? Top of the broadening formation, hammer, 2 down and green at the bottom of the range with full time frame continuity. Where's it going to go? It's trying to go up there. So if this goes 2-2 reversal next week, we still have all this stuff up and left to take out. So this is something I want to know about. You see all these pivot targets? These pivots are what speed it up, right? See how it's really fast through this range, really fast through this range? It's because we're going back through traders. Versus when you go right into all-time highs or right into all-time lows, you don't got much to trade back through. So very important concept, but hopefully you guys are seeing, right? We can scan for the 2 down and green. We scan 2 down and green on the day using our scanner. We can go to the month and we can look for the strongest stuff on the month, and that's all we have to trade. This is one way to make it systematic. Every day you can go in, scan 2 down and green day, green on the month, and look, where's the broadening formation, right? Where is it trying to go? And I did want to touch on domino trades today, but sadly, we went pretty long on this. I just wanted to be thorough and give you guys as many examples and answer as many questions as possible. So I'll give you guys the last 9 minutes here to see if there's any final things you guys want to cover, but hopefully this helped you. SIL, yeah. SIL 2 up in red. Nowhere near a weekly reversal, nowhere near a monthly reversal, so conflict. It's going up this month, going up this week, closer to reversing on the day, but it's nowhere near reversing the week or month. Yeah, quick domino. The scanner will be updated with algo alerts in the near future. It's not currently public. We're testing it. Okay, we'll just quickly do Domino. So Domino is where you have a lower time frame that triggers into bigger time frames. So you can think of it like if you have a cat, for example. So you have a cat and he's walking across the table and he knocks off the candle and burns down the whole house, right? You have this little animal that, does makes this huge problem, makes this huge thing happen. So you can think of it like you can use really tiny time frame guys, like someone that's just buying like 100 call options, like a really small trader. You can use that guy to trigger the institutions to do something, or the bigger guys. Maybe they're not trading 100 contracts. Maybe they're trading 10,000 options contracts. We want to trigger those big guys to do stuff. So what we can do is this. We can use signals. So the 2-2 reversal, we can use the inside bar and full time frame continuity to trigger bigger time frames. So this was a good example. IBM, notice 2 down in green on the first day of the week when the market fully reversed. Notice how that's after lower lows. So when this reverses, where's it going to go? Up there. They buy, they stop out, we buy, right? Just to make it simple. Then you'll see in here, inside bar that closes Friday. So what happens Monday? The weekly buyer comes back Monday, breaks the inside bar to the upside, and notice every time frame's green here. So what's happening? The daily signal causes a 3-2 on the week. Remember, a 3 is a broadening formation. So what is this? It's an expansion of the broadening formation. And we ask ourselves, right? Are we back through a range? We are. We have targets. So this was this target. We go to a daily chart. Right, you had this. So we can mark out our targets. So the day signal triggers the week signal. Right? Then we go to the month. Notice 2550 was the month. So what happened? We mark it out. This was our day. Daily trigger, which triggers our weekly a few pennies above that. In red, which triggers the monthly way up here. So the day triggers the week, triggers the month. This is something we look for because you can use, like, imagine it's like you can use a 20-cent stop to trigger a $80 move, right? Because let's say IBM goes reversal on the month and it goes all the way back to the all-time highs. How tight could your stop have been using a daily, right? Like the widest it would have been is this, $2. So like if this works, it goes from here all the way up there and we make $50 a share, we're risking 2 to make 50, right? Which would be risking 4 to make 100. So if we win 90, or if we lose 96 trades and win 4, it's like we're still gonna make a ton of money. So hopefully that makes sense. Which signal? 2-2 reversal. Or gap down buy, gap up sell. Pick one of those. Because like one of my favorite setups that occurs is when you have a stock that's full time frame continuity and then it gaps down and then it just keeps going. It's really simple. So gap down buy, gap up sell. And right now we can't scan for that, but in fact, we're going to be adding gappers, options flow, as well as news flow with our algo alerts. It's going to be all added to the scanner in the in the next coming month. So we're going to have a lot of stuff added in, which is also going to bring a lot more functionality, and it's going to make it more systematic. Like right now, you have to click a few buttons, right? So you go to the day, scan for your 2 down in green or your rev strat, 322, whatever your inside bar, whatever you're looking for. Then you switch to the month, the quarter, the year, and you filter it out. And from there, it's like you can do the same thing every day. All I do is I go scan my inside day, then I go to the month, and I filter it by the strongest and weakest names. And that's literally what I'm doing. Except I'm doing it with inside days, 2-2 reversals, hammers, shooters, outside bars, like all of it, is then we get a nice clear picture. All right. Well, that being said, the last thing I wanted to share with you guys is we do have a newsletter. So it's 100% free. If you guys are interested in getting more and having more streams like this, we can get those sent to you right here. I'm just going to copy the link and send it over. So check it out. And if you're watching this replay back, it'll be in the description for you. Here it is. And the last thing I want to say, because we didn't really give it our all on the stops part of this, is stops. We want to put them at lower lows and higher highs. So when we're trading, doesn't matter what time frame, what we're trying to do. If we're taking a short, so for example, IBM, right? We find our broadening formation. We made lower lows. We made higher highs to this stuff. When we go into the higher highs, right? If we take this signal and down here, we take this reversal signal here. We want to have our stops either against those highs or near them. And this means, right, if we're shorting like this, we don't have to put our stop all the way up here. However, this is more likely to keep you in the trade just because the further away it is, right? Price is less likely to go $2 up than it is to go $1 down, right? So you're going to be adding more risk when you put it against those highs. But this is why we like multiple time frame analysis. We don't have to short it down here. When it makes the new higher high and it goes red on the 60-minute, that's, we can go dive down in there and we can get after it. Not every trader is going to do this. But you can see when this goes reversal on the 5-minute, now we can actually put our stop right at the highs. And instead of it being $2 of risk, now it's like 60 cents, right? Over half of that, or less than half. So hopefully that makes sense. And a lot of people, they'll do things like this where they'll see higher highs and they're just waiting. And then once it starts coming back into the range, they go like this. They make a much wider stop and they target the broadening formation. And this is pretty much like if you watch ICT traders and stuff, that's pretty much what they're doing. They're taking this and they're just entering way later. You can do that, right? But instead, what we can do is we can use, again, slightly higher highs. And instead of, big wide stops against those, we can just use this high instead. Because whenever we make those higher highs and start reversing back down, that's where we want to put our stops and also where we want to put our entries. And when it goes into these higher highs and reverses, like we want our stops against this stuff. We ideally want our entries near those higher highs. But that's the gist. So when you have, just to summarize here, if we have a reversal on a monthly time frame, let's say the chart looks like this and it's breaking to the upside. Throughout that month, right? When we make the lower lows in reverse, we want our stops here and we want our entries as close to those lows as possible. And that doesn't mean you have to be a 1-minute guy, but as close to those lows as possible. The last way we can do this is when we make the low and we reclaim, meaning price is now starting to come back through above this lower low. Once it's back up there, we can put our stops against this lower low and our entries somewhere near this one, right? So on the opposite side of this, it would look like this. Once it's back below these highs, we put our stops against those highs, our entries somewhere near this. And that's how we want to think stops. It's really simple. Just make sure you don't have a giant stop. Right? If you get in and you're risking half your account in a stop loss, you're doing it wrong. We want to start with small positions through big ranges and then take more trades as it starts to go in our favor, just using those broadening formations. But that is all I have got for you guys today. I know it was a long one. Hopefully you guys enjoyed. I have a lot more content on my channel. You can go check it out. Check the playlists. We have a lot of nightly videos that we post. But that being said, hopefully you guys enjoyed. If you want to check out more from us, like the scanner, the algo alerts, anything else, check us out at stratalerts.ai. So have a good rest of your day, everyone, and a good rest of your weekend. I'll see you guys next week. Adios.